Hello, 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 everyone. Happy Monday. Happy Monday, you guys. Thank you for joining me today. My name is Andrea Wilson. I'm the broker and owner over at Brick House Realty. We're a full service real estate brokerage. I'd like to join you here on Mondays, give you some information, tips, just as it relates to the real estate market. Kind of like what's going on. So today's topic, I'm going to be talking to you about FHA loans versus conventional loans and why it is important these days when trying to buy a home. I do have a slide that I'm going to share with you guys. So thank you for joining me. Thank you. Thank you. If you are watching this and this is your first time joining me, please go ahead and hit the like and subscribe button. Share this out, right? Share this out to everyone. So let me share my screen here. All right, so you should be able to see my screen. So today's topic, what I'm going to be sharing with you guys is what is a FHA loan. So a FHA loan is a Federal Housing Administration mortgage insurance-backed mortgage loan that is provided by an FHA approved lender. So many of you, I'm sure, have already heard of an FHA loan. And a lot of times in the marketplace, it's actually frowned upon by some agents and by homeowners because of all of the negative information that is given out about a FHA loans. So traditionally, a FHA loan is a government-backed loan. It's insured by the government. So it offers some greater security to those banks or those mortgage companies that do these FHA loans. Yes, they do allow for a lower credit score. So I'm going to give you what the textbook says, what the guideline says about an FHA loan, and that is that you have to have a minimum of a 580 credit score. In some cases, it says that you can go below a 580, but it's going to require for you to have, maybe like 10% down versus the normal 3.5% down. So FHA loans requires a 580 credit score, at least 3.5% down, and you have to be a first-time home buyer to go FHA loan. So some of the things I want to talk about, those advantages to a FHA loan, is going to be that it has that lower down payment, 3.5% down. It has the lower credit score. We talk about that 580 that's on here. Now, realistically, though, when you go out into the marketplace and you're trying to get one of these loans, the lenders really want you to be closer to a 620 score. You might find some challenges if you go in with that 580. They probably will want you to put a higher down payment, especially during this COVID time, where lenders are being a little more conservative on their lending practices. Also, another benefit of an FHA loan is that the seller can contribute up to 6% towards your closing costs. So you can come to the closing table with your 3.5% down, and you can request the seller to cover your closing costs up to 6%. You have to understand where we're at as a marketplace, though. If you go in asking for that 6%, so say a seller wants $100,000 for their home and you're asking for 6% closing costs, that's roughly about $6,000. So it's hard in this market to say, Mr. or Mrs. Seller, can you pay for my closing costs for me? You're asking $100,000 and pay my closing costs. We have to get a little bit more creative. You want to consider offering more to help offset that. At minimum, at least the $6,000. So maybe offering $106,000 in this example here. So the seller can contribute towards it. So some downsides for the buyer on there is going to be what's called a MIP, mortgage insurance premium, that is going to be placed on your mortgage. The problem with it on the FHA loan is that it never goes away. You can avoid it up front because you can put 20% down if you have it, and then you can avoid having to pay that. But once it's attached to the loan, it does not go away on there. You're stuck paying that unless you decide to refinance down the line. So it's important that you understand that mortgage insurance that's going on there, that is a protection. That's nothing, no benefit to you. You get to be the lucky one to pay those extra fees that it costs, but it actually is an insurance that gives better protection for that lender and with wanting to work with you. So in the event that you were to default on that loan, they can tap into those insurance funds to recoup some of the money that they lost maybe when you defaulted or that home went into foreclosure. So there's lots of benefits for a buyer when it comes to an FHA loan. On the other side of that is your seller. When that FHA loan or someone with a FHA loan is presented to you, it's something that you don't want to overlook. These are oftentimes, first-time home buyers that are using FHA loan product. And so there's going to come with some requirements. They want to make sure that the home is in move-in condition and just not a lot of maintenance concerns for that buyer. But overall, if you have a pre-approval or if you receive a pre-approval from someone with the FHA loan, it definitely, if it's a strong lender that's out there, then you should not be afraid to move forward with it. So some other things that you should know about the FHA loan is that it's actually going to have some limits. Depending on the county on which or state where you're located, those limits can vary. And here in the Cuyahoga County market, a single family loan limit is $356,362. The duplex is $456,275. A triplex is $551,500, and a fourplex is $685,400. So these are some things that you want to consider. So in the Cuyahoga County, Cleveland, Ohio market, our home prices are much lower than other places in other parts of the country. So you want to definitely check your county where you're at, where you're trying to buy, because in some areas, these loan limits can be much higher. So this doesn't mean that you can't buy a home. That just means you need a different loan type if you're looking for a property that is not within these guidelines. So they have a set amount of guidelines. Also, sometimes the income limits also are a restriction as well. So the other most common type of loan is going to be your conventional loan. So a conventional loan is a loan type not offered through any governmental entity. Conventional mortgages are available through private lenders such as banks, credit union, mortgage companies, and some, have a typo there, some conventional loans, right? So the conventional loan, they do have a first-time home buyer product that is 3% down, right? So that's even better than what's being offered under FHA. The problem is usually the credit score requirement is a little higher than under a FHA guideline. So the guidelines say that your score needs to be a 620, but in reality, your score needs to be closer to a 680, 670 even when working with a conventional loan. So that's definitely something that you want to think about. Some other benefits is that it could have lower interest rates than looking at the conventional loan. Will have, if you have less than 20% down, you will have PMI, private mortgage insurance, that is placed on the loan. But the good thing on a conventional loan is when you've paid into that 20%, then that PMI will actually fall off of there. You definitely want to call once you hit that 20% because your lender or that mortgage company that has your loan can wait until, I believe it's either you get up to 21 or 22% into it before they have to officially drop it off. So you definitely want to make sure that you call them to get that PMI removed off of there. So a downfall to the conventional loan, whereas on FHA that the homeowner could give up to 6% towards the closing costs, on the conventional loan, on most loans, they can only give up to about 3% on there. So just see one thing. So the loan limits, the 2021 Cuyahoga County loan limits are at $548,000 250 for this is going to be for Cuyahoga County for 2021, and they slightly change from year to year. So the thing about it is you definitely want to understand. You talk to buyers, they really don't know, or sometimes they don't really know what type of loan they have. And I really want to take a moment to explain why it's important in this market. So with the FHA loan, when that appraiser comes out, he or she is going to also make sure that the property is in sound condition, like move-in ready condition on there. So like no chipping paint, making sure that the electrical panel, for example, is in good operating condition. And there may be a few other things on there that they're going to require. So when a seller hears about this, they're like, well, no, I've already put in some money, and they're just frightful that it's going to be this long list of items that they have to take care of, and they rather not just have to deal with any of it. So when you think about if you are a seller of a property, there's a couple things that has to happen, right? Or when those offers come in that you're going to review and see. So the first thing is you're going to look at who's offering cash for a property. Cash is king. That's going to be at the top of the list. Then the next best thing is going to be your conventional loan, because it has the least amount of loan restrictions. That buyer had to have a higher credit score on there. And then it's going to come next is going to be your FHA loans on there, because, lower credit score requirements usually need some seller concessions that are on there. So in this time, the way that the market is going, there's low inventory limits and lots of buyers out there. Sellers are going to look for, if we're ranking these, they're going to look for cash first, then conventional, then everything else kind of underneath that, your FHA, VA, USDA loans underneath there. They want to get to the closing table. Your sellers are going to want to get to the closing table as quickly as possible for the most part. And they're also going to want to have the least amount of contingencies in the contract. And so when you are writing an offer and you have a FHA loan, it's important that your real estate agent is checking the right box on whether you have a conventional or a FHA loan. Right. It's important to honestly, the lender that you're working with, and that they are familiar with this loan company. A lot of times as real estate agents, we receive contact information. We receive contacts or pre-approval letters from companies that we've never even heard of. And so that is concerning or alarming to that owner, especially when you try to call the name that's listed on that pre-approval letter and you're not able to reach anyone. So if at all possible during this time, you definitely want to make sure that you are trying to go in, if your credit is strong enough, that you're going in with at least a conventional loan during this long time. Now, while I understand that for some people, going the route of a FHA loan might be a little more beneficial for them, but if you can get your pre-approval through a conventional loan, or where you could work it, where you can go either way, I would definitely say that you consider doing that. And if you can get that pre-approval under a conventional loan, it will give that seller a little more confidence that is going to get to the closing table. I hate to say that, but I'm watching a lot of buyers really miss out on properties because they're not able to secure things, all because they have a FHA loan. So conventional, they do have a 3% down product for first-time home buyers, but most people end up going 5% down on a conventional loan unless you're purchasing an investment property. And if that's the case, you can expect anywhere between 20 to 25% down on there. I wanted to also take a few minutes to kind of talk about what's going on in Cuyahoga County after quarter one, January, February, and March of 2021. So we had a total number of home sales, 4,278. The average sale price was $188,636. New listings, we had 5,532 new listings, and the average days on market was 53. So don't get that average days on market confused, because like, oh, well, they are staying on the market for much longer time. This does not really paint the picture of what's going on, right? So we had a number of new listings, 5,532. And in total of those properties, the average is 53 days. And so this is actually a combination of properties that are in great condition, not so great, just everything in general. And so those homes that are in desirable, very highly desirable neighborhoods and have been well kept are going within 24 hours. So if you really want to be competitive in your offering, then you want to try to present in either cash or a conventional pre-approval letter. You want to try to limit your contingencies that you are requesting. I would never suggest that you don't have a home inspection. I think that is very important. But I think that you definitely need to do a lot of your due diligence up front versus waiting for it to go under contract. In order to make those decisions on if that's a home for you. But I definitely will always say that you should consider having a home inspection done and not conform to what's going on and what we see in the marketplace here. If you have any questions, feel free to reach out. I will be happy to answer any questions for you guys. People always text or email. And people are always texting and emailing, asking questions. I'm happy to answer that here. So, oh, wait, I see a few questions here. Totally off topic. What about using a HELOC for the down payment from another property? I can do that. I don't know, Ebony, exactly. The reason why I'm saying that I don't know, I know that, so if it's a investment property, you probably can do that. If you are using a FHA loan, I know they frown upon your down payment coming from a loan product. It has to come from either your personal savings or down payment assistance programs and something like that. So I'm not sure. I think it's going to depend on what type of loan product that you use. But I'm curious. I will find out and I will send you a message when I find out about that. And then it says, what is a good amount of money to have for closing costs? So for your closing costs, so there's two, just to be clear, there's your down payment, which is either 3.5% or on average, if you go conventional, 5%. And then your closing costs could be up to 6%. And typically the lower the price of the home, so like 100,000 and under, your closing costs are going to be much higher, closer to that 6%. But on average, anywhere between 3 to 4% is which of the purchase price. So if it's $100,000, you need to have at least $3,000 to $4,000 to cover for your closing costs on there. So I hope that helped you out on there. So you can ask for the seller to cover the closing costs, but you just have to, in this market, we are really we're asking over. So if they want 100,000, then we're at least offering 104,000 to cover the closing costs in there and more. So we're writing offers right now, $20,000 and $30,000 over asking price. And we're getting rejected even with $20,000 and $30,000 over asking price. So it's not even a given that you're going to win that contract, even with giving that extra amount on there. So, all right, guys. Thank you for joining me today. Wanted to really just kind of talk about the FHA and conventional loans a little bit more. If you would like more information, you can send me a DM. I will respond to you. Thank you for following me today. I hope you have a wonderful week and beautiful Monday. So have a good day, guys.